Before we get on with today's podcast, here's a special announcement for our podcast listeners. From time to time, you hear Steve Peasley talking about portfolio checkups in locations in the San Francisco Bay Area, Los Angeles, and Orange County, and that kind of leaves you out if you live in Orange County, Florida. Well, don't feel left out. If you would like to take Steve up on his offer to look over your portfolio and give you a health scan, it can be done on the phone. You can send copies of your documents by fax, email, or regular mail and join Steve for a one-on-one conference call. If you're interested, just go to investtalk.com or call our 24-hour InvestTalk answer line at 888-99-CHART. That's 888-992-4278. And thanks for listening to Invest Talk. This is Invest Talk, an hour dedicated to making you financially independent for your retirement. Invest Talk is a two-way conversation. It's questions and answers and ideas for reducing risk and finding opportunities to make your money grow. And now, here's your host, registered investment advisor, Steve Peasley.
Good afternoon, everybody, and welcome to the Friday edition of Invest Talk on December 5th. The month of December has gone by pretty fast. And we welcome all our podcast listeners and of course, those listeners on investtalk.com on our website. Today, I have with me, helping me out, is registered investment advisor Helen Crawford. Thanks for coming, Helen.
Hi, Steve. It's good to be here.
And she'll be helping me pull up charts and just help me discuss what the events of the day, and of course the big one's going to be about that jobs report that we'll talk about. Now, our mission is to help you make better decisions about investing, about your retirement portfolio, about your 401k, your IRA, or even just what you're doing with your money. Are you buying properties? Are you selling properties? What are you doing with your money? Hopefully we can help you with these kinds of decisions. Now, living in a climate of bad news is what we've been living with for quite some time. With the serious job losses we had today, we lost 533,000 jobs last month. Some of our longest standing companies, I won't say best because the car companies aren't our best companies, asking for money, billions upon billions of dollars. It's really hard to stay calm when you have all this bad news thrown at you. Also, try to remember that the news media likes to harp on the bad news because it brings in viewers. There's good news out there. They just don't want to talk about it. Never want to talk about it. Well, I'll give you an example. When oil prices and gasoline prices are going up every day, all they did was harp on how much it was going to cost the consumer and it's going to kill the economy and how bad it is. And remember, every day, several times a day, we would hear this in one way, shape, or one way or another, how the commodity prices were skyrocketing, how this was putting the damage. Commodity prices have been falling like a stone. Gasoline is less than $2 a gallon now, and they never talk about it. Now, isn't that going to help the auto companies, by the way?
That's right. They seem to be like the Grim Reapers out there, Steve.
Yeah. There is some good news. Did you hear, for instance, I'll give you another example. Did you know that last week that the applications for mortgages, refinancing and new, was up over 100% in 1 week? Wasn't that good news? How about 200% for refinancing and 38% or so for new home mortgages? Isn't that good news? Well, did you even hear about it? No, never. You didn't hear about it. Now, I know you didn't because they don't talk about that stuff. It's good news. What they talk about all day long today was the job losses, and which is bad. I'm not even pretending it's good news. It's terrible news. Terrible. But did you also notice, probably didn't even talk about it, I didn't hear them, that the reason why the unemployment rate didn't go up much stronger, because the rate of unemployment came in less than they expected, even though the job losses was much more than they expected. Well, how come the unemployment rate didn't go up what they expected? They expected it to be 6.8%. It came in at 6.7%. Why? Because they revised the last 2 months of job losses down.
And don't tell me they got the numbers wrong again.
Of course. When has the experts ever been right? Never. Never right. So, I understand I understand that they need to report the numbers, and I understand they need to report the bad, good, and different. I don't have a problem with that. Report the numbers. Just don't harp on it like the sky is falling. And you don't hear them talking much how these bad numbers did not really affect the market that much even this morning when they came out. They should have been all over that saying, surprisingly, the stock market's fairly strong. It's only down 80 points. That was at the opening.
Right.
You should have been down a lot more than that with these terrible numbers. Why wasn't it?
Well, I think we're beginning to not be so afraid of the news anymore, Steve.
Yep, the stock market isn't. Because it's just taking all this stuff in stride because it's already built in all this bad news. That's what it looks like to me. Anyways, getting off on tangents here. Now, as you know, our mission is to help you. We want to help you. That's our job. We know that the market is tough. We know that. But if you're not already out, it's too late. Sometimes you need a compass in this kind of market to help you guide through wherever you need to go. Principles, you need rules, you need help. That's what we hope to achieve, be your help, be your resource for information. Because we're on your side. Remember, we're in the market too with our own money. We're in there. So we also want to be a voice of reason. We don't want to be doom and gloom all the time. See, one of the reasons why I'm not doom and gloom nearly as much as everybody else is because I know you get all that already, the doom and gloom part.
Right, and don't forget, Steve, too, we've also know that in every market there is money to be had and to be made. It's just preparing yourself, and with news coming out like that all the time, it can cloud your judgment.
Yeah, you start to get so depressed that
right.
you
just don't want to do anything.
You don't want to do anything. You want to put your head in the sand, don't want to look, don't want to do anything, and that's a mistake.
Yep.
Because what will happen is the market will start to rally, and I can't tell you it's going to start to rally tomorrow, today, or next week, next month. I don't know. I can tell you there's some good signs out there that seems to indicate that we've hit a bottom. I don't know if it's the bottom, but a bottom. But you need to be able to make decisions, clear-headed decisions, and decide when to get back in the market if you're on the sidelines. And our talking point is what to do now that we're in December and we have the end of the year coming. What can you do now to prepare yourself for the next year?
Yeah, it should be a real good cleansing time for you, really. You should be clearing out your portfolio, getting ready for the taxes, and looking forward to the money you're going to be making in the new stocks that are going to...
Start being a little more positive.
Yep.
The market very rarely goes down 50%, people. Very rarely does it go down 50%.
And it has a real natural way of correcting itself as well.
Right. We're way oversold. There's going to be a correction. And you want to be there because you've already taken the loss. You've already been killed with the loss. Well, if you're going to get out now, you're just going to compound that loss is what you're going to do because you're going to get in right when after it's already rallied.
Right.
Can't do that. That's not how it works. So the market started off pretty low today. I mean, the futures market was down because of jobs lost. 533,000 jobs lost. And they expected only about 350,000 or so, I think. I think that was the number. So the market was weak, stayed weak most.